Well, good morning. It's Monday. It's October the 14th, and we got a lot to talk about this week. Okay, so Trump met with China, no negotiations, but there's a truce for now. That means no one's going to be putting up these tariffs. There's going to be a wait and see pattern for a while. Again, there hasn't been any resolution, so this wet blanket's going to stay on the stock market until we're resolved. I'm not expecting a lot of trending action. I'm expecting a lot more wait and see type of trading action we've been seeing out of the small caps. And they're really preventing the large caps from going higher. But with that said, we are now completely 2 days on the E-mini S&P above the 50-day line. Let me see how the SPY looks, because that's the overnight session we're looking at right now, and the market doesn't open for another hour and 20 minutes. All right. In terms of the regular market, we now have one session that's completely above the 50-day moving average. And it looks today, because of the truce that was resolved last week with China, that negotiated with China, it looks like we're going to continue staying above the 50-day moving average unless today is really, really weak. Although, even if we stay above the 50-day moving average, really, folks, don't expect a lot of upside. Take a look at the mid caps. Remember, the S&P is not the entire stock market. There's a lot more to it than that. Notice sideways, not a lot of trading action. Don't expect this market to trend till the small caps and the mid caps are trending, and they're not trending right now. I mean, look at this. This is 2 years. I mean, look at this right here. We haven't gone anywhere in over a year. We're literally sitting at the 50-day moving average for over a year. And that's if you don't take into consideration this little correction that we had. That was really quick. But anyhow, you get the point. The point is the S&P 500 cannot sustain itself without other stocks being on board, and they're not. But let's talk about things. So the timing for China and Trump to negotiate Friday was actually really good. Why? Because this week bank stocks report, and no tariff being imposed means lower yield and higher interest rates. And higher interest rates are really good for bank stocks. So these are the companies, these are the bank stocks that are going to be reporting this week. We got Goldman Sachs. Let's take a look at the chart. Let's see how it looks. Very, very choppy, as you could see here. Not a lot of directional bias. Here, let me make it pretty for you. Yeah, again, not really anything strong. Looks like we can go a little higher, but notice again we're in a sideways trading action. But do expect prices to go a little higher if the numbers are better than expected. So Goldman Sachs is one. JP Morgan is another. A little bit better, but again, sideways. And lastly, we have PNC reporting. These are the three major bank stocks we have reporting this week. Now, so far, and again, sideways trading action. This one is near highs. So if it takes out 144, 145, there's a good chance we may rally. I kind of like PNC. Aside from PNC, we have Netflix, Johnson & Johnson, IBM, and a few other stocks coming out this week. Now, so far, for the 15% of stocks that are going to be out this week, the expectations are 87% above, earnings per share being 87% above expectations. The expectations for bank stocks, however, are, and write this down, this is important, they're really low. They're down from a year ago, expecting to come in at 9.4% lower on 0.3% higher revenue. That means anything better than that is going to cause bank stocks to rally. And I think we're going to see a rally because these numbers are just, the expectations have been beaten down and beaten down and beaten down lower and lower. So I don't expect bank stocks to do really well, but I'm expecting bank stocks to outperform these lousy expectations. I'm expecting bank stocks to do better than 9.4% lower than a year ago. Maybe 8%, maybe 7%. But here's the thing. The market's already pricing these numbers in. This 9.4% lower on slightly higher revenue. So unless we see something lower than that, which is really low, there's a good chance we'll see a little rally from financials and bank stocks this week. Again, keep your eye out on earnings. Besides bank stocks, we have Netflix, Johnson & Johnson, IBM, and Schlumberger. And again, bank stocks, Goldman Sachs, JP Morgan, and PNC. So there's a lot of stocks that are reporting so far, and keep this in mind, take this with a grain of salt. Expectations are lowered. They've been beaten up. So far, the numbers are 87% better on the 15% that have come out or that are coming out. So we're looking slightly better because the expectations have been beaten down so bad. This week, the focus is going to be on bank stocks. And again, unless you see, let me show you this again. This is really important. Keep an eye on this. This is the S&P 500. It's expected to go open a little lower today. Let me show you the 50-day line here. Do not even think about going long the S&P till you see 2 complete days like this. This is just one day. We have the moving average here. We want to see one more day close completely above the 50-day line. And again, I'm not really bullish. I'm not really seeing a strong trend. So even though we're going to go above 2 days, probably, I'm still going to be very skeptical. Let's just leave it at that about the long-term direction of the stock market. Keep your eye out on financials this week. Keep your eye out on, I don't know what it is with me. I can't talk today. Keep your eye out on earnings. Goldman Sachs, JP Morgan, PNC Financial, Netflix, Johnson & Johnson, IBM, and Schlumberger. And before we leave, let me just take a quick look at Netflix. I know everybody's looking at Netflix. Yeah, Netflix don't look that great right now. They're below the 50-day moving average. They look like they've been beaten down, and the stock just doesn't look that great. So don't expect too much from tech and Netflix. Let me look at IBM as well, since we're already here. I just can't stay away from you guys. I don't want to end this video. Yeah, not that great. Again, choppy. Don't expect a lot from tech. And again, earnings. Earnings, don't worry about what the actual number is. Look at the number in light of the expectations. And if you want to see what expectations are for any stock, just put the stock here like I just put the ticker symbol IBM right here. Click go. That already takes me to IBM. And then go right here to the lower left, earnings estimate. And that'll give you all the numbers you need. It'll give you the estimates, the number of brokers' estimates, the low estimates, the high estimates. So just put in your ticker symbol on the stock you want, head lower, and go to analysts' earnings estimates. Hope this was great. I'll talk to you guys tomorrow. Take care. Have a good one. Stay out of trouble.